Hi guys, this is Simon with Trade and Perform Coaching. Going over Friday's really a pretty incredible day. I don't know that anyone was looking for a day that we had this much up, but there were a lot of clues, and I'd like to go back to the morning meeting I held with my traders, kind of taking a look at what some of the issues were coming into the day. The first thing that we discussed, and the thing that I wanted to get across the most, was that usually when we have large liquidation days, it's rare to have a second large liquidation day right behind it. Also, if we think a little bit about the logic, right? Why did the market sell off? Because Twitter came public. So there wasn't exactly bad news. We had something out of the EU the prior day that apparently had motivated some sellers. We're just extended, right? We're very extended. Also, when markets get to tops, one of the big characteristics of a top or a bottom is extreme volatility both ways. And we've obviously experienced this week. So that could be a sign that we're beginning to form a top or that we're near a top. But the focus remains on day trading primarily, right? And so there was a couple of ideas that we discussed. First of all, we really didn't want to get very active right at the open, right? We wanted a good stretch, which meant essentially, since we were opening up at gap fill, that we really didn't want to necessarily trade there, meaning we didn't want to fade, nor did we want to go long till we could kind of figure out exactly what was going on. The other thing that I pointed out very early was that from the prior day, we had a downtrend going. Now, downtrends are just downtrends. There's nothing special about downtrends. They're just lines, particularly trend lines. They're just lines on a chart, right? But if we were going to see downside, the one thing we did not want to see, or particularly early sign that that we'd want to see the market trading below this downtrend line. And the first thing we did as we opened up is we popped up above it, we backside tested it, and then we stayed above this gap fill area, right? We went through the gap fill and we stayed above the gap fill really all the way through the 9 a.m. period, right? And when they were unable to push below, which I emphasized in the pre-market meeting, when they were unable to push below, right, what did we need for more down was the question, right? What do we have to have? Well, in order to get more down, we have to be below. First of all, we had prior day's low. We had Globex low down here at 1737, which was initial support for the day. Okay, so we'd already tested initial support. We'd already come back, and that was at 7:30 in the morning, Central Time. We'd already come all the way back up to the gap fill, right? And then at the open, we got up above the gap fill, and we backside tested it. The next thing I said was that, generally speaking, if we are going to have on the upside, if we're going to have a break in the trend, I said that generally comes after 10:30 in the morning, right? Now, I had mentioned it in the downside, but that's also generally true of upside moves, right? Somewhere between 10 and 10:30, those moves tend to get broken, right? And the other part that I had emphasized was what is the characteristics of this market has been for months now, has been slow grind ups, sometimes fast move ups, but consistent grind ups in the afternoon. Have there been downside moves? Yes, but the gross majority of the moves have been to the upside, and slow, grindy moves to the upside. So that was something that you had to keep in mind when you're looking at taking a short in the afternoon. Was they've been much more difficult. So let's go to see what we were looking at before the open. I'm going to pull up a chart here real quick. So what I pointed out in that meeting as we were going through, let me grab a trend line here, was that we had a downtrend going, right? And if you also look, we had this downtrend right here. I guess you can kind of draw it just like that, right? And one of the things I'd emphasize, right, here we are coming up, if you look into the open, which was right here. We wanted to stay in this down channel if we were going to have more downside. And I had emphasized that 1744, 45 area, right? Even without a zone, this was a very important area. And you can already see coming into the open, we had already established a trend line on the upside, right? And you can see that. And one of the things I pointed out was if you're going to take a short, right, that you might want to wait till this uptrend gets broken. Usually what happens about midday we break the uptrend, maybe we get a backside test, and then we can get some downside. But we were grinding all day, right? Now, this is pretty rare, just to give you an idea. Let's go back and look, right, at the prior day here. This is, again, on trend days, this is highly effective. On other days, not necessarily so. So this is approximately our open right here. Now, coming into the day, this is Thursday, this was our downtrend line, okay? And we had a small uptrend line going just like that, right? And then there was a larger channel here that had kind of been broken, and it was running across the top like this, and across the bottom like so. And so this was an attempt prior to the prior to data coming out and prior to the market opening to break what had been actually a multi-day uptrend. If we look, this trend line actually comes all the way back from here and continue driving here. I can draw it for you. So there's the trend line that we've been dealing with, right? And you can see that they had tried to break it here. And let me clean this up for you just a little bit so that you can see where, there we go. So that's the major trend line that we've been working off of now for several days. And as you can see, we simply had not broken it. We attempted to break it here prior to the open, right? But obviously it had held. So in that question, right, normally we say if the market's going to come to the downside, at least wait for your trend line break. And if you look intraday yesterday, so we came down, we held, this is a huge rotation into a backside test on Thursday, right? We got a beautiful rotation down. In the morning, first we broke this downside trend line that was holding us, this tighter one from the afternoon, right? We came back up and we tested the downside, the larger downtrend from yesterday morning, right? We came down, we backside tested it, we had a downside move. Now, this entire test, right, took place prior to the econ data being released. Upon the econ data, we came all the way back down. We attempted to hold this, we attempted to re-break down to the underneath the prior trend line that we held in the afternoon, right? Then we came in before the open and we retested this trend line that had held us all day yesterday afternoon. On the open, we got above that trend line and we never got below. And as a matter of fact, it simply waited until we caught this new trend line that had come from the econ data, and then we had tested up to the upside. And the one thing I had cautioned on yesterday was if we get an upside move, let it get a good extension up. So you can already see all afternoon, right? We had broken this downside test up, back to the backside, and then continued up all day. Now, with that in mind, all this is interesting information, but how would have you traded it, right? And where would be the area to trade? And obviously, no one was thinking we were going to grind up all day. So let's go look at that for a second. So this was the actual trade plan right here, right? So you'll notice a couple of things. First of all, the zones themselves, without the trend lines, look how beautiful entry areas they had given you on the first touch. And let's define first touch. First touch is first time from either underneath and it comes into a zone, that's a touch. If it gets above the zone, then comes back down into it, that's a first touch. For example, here we clearly traded up out of the zone and then back down into it. This is a first touch of this zone from the upside, from the downside, and this is the first touch of this zone from the upside, okay? So as you'll see, we got responses both times there. So the next question becomes a matter of rotation. I discuss rotation with my clients. I don't want to kind of jump into it here, but it's very important. We had a very nice stretch into this area, and if you could have gotten filled on the first touch, which is questionable, it was quick, right? You got a beautiful rotation down. However, on this rotation down, this was gap fill, and we were unable to get back below gap fill, and that was the critical clue in the morning, right? You'll see that we started grinding up, right? We kind of made a quick move up into initial resistance. Now, at initial resistance, I generally expect responsive sellers the first time in, and actually often it'll mark the high or low of the day. In this particular case, we held at initial resistance no matter where you entered in this trade, right? The first time into the zone, it did come into the zone, it gave you almost a 2-point rotation down. Very, very small rotation. First clue. If you're getting 2-point rotations to the downside, it's going to be very hard to get a short off, right? So the next thing that we're looking at, right, we're coming into the zone before 9:30 a.m. and we still haven't traded up out of it. We've kind of touched a couple times, but we haven't traded out of it. But if you'll look, by 10:30 a.m., we're still in the zone. That's over an hour, and it's too long to stay in a zone to get a downside trade. And the solution, at least for me, would be to simply cover the short if that's where you had shorted the trade, right? They should reject much, much more quickly. It was a sign. It just simply took too long. Again, as you can see, we are simply trending up. But even within that trend up, right? First time into the zone, offered a rotation back down, right? And again, first time up, even if you had taken it from the back of the zone, you could have accomplished your 2 points. But the major key was all day long, higher highs, higher lows, and right off the gate, we could not get below the 1745 to 1747 area, which was essential in getting more downside, and it essentially had trapped the shorts. Also, if you have with the clues, long liquidation days tend not to have follow through, and most importantly, we're still in a bull market. So all this information is great. As a trader, this is what I'll leave you with. You have to find a way, A, not to need money from the market. You have to find a way to execute these trades. A, you have to get good location. B, you have to focus on where is the highest odds trades location for you. That comes from understanding your strategy in detail, and that's what I go into with my clients, so that you can repeatedly, A, on down days, and everyone has down days, right? You can know when to stop trading to protect your equity, number one. Number two, you have to be able to identify when something has changed. Our expectation, or if your expectation was that we were going to rotate, if we had had a weak market, right, we had tested the 1737 prior to the open. Inability to get down and retest Globex low is a sign of strength, number one. Secondly, we opened a gap fill, and we came back and we backside tested it and held. Number two, sign of strength, right? Number three, even with good size rotations, we were getting no motion back down to the downside. So as a day trader specifically, you basically had to know where you're going to take your shorts, right? And where they weren't working. And on the shorts that I did take, I ended up taking quick scales and getting stopped on the balance of the trade repeatedly through the course of the day. But that's okay. I just simply didn't see the market running up as high as it did. I mean, we've almost had, if you look at the 2 days together, when we include these pieces in, we've had, this is a 80% recovery on the ES. Now, NASDAQ was much weaker. It was about a 50% recovery. But they were both huge moves back up to the upside. This initial resistance was really, really key to the day. Once we got above it, strong resistance was a big key. You'll see strong resistance held us from 1230 all the way almost till the very middle of the last hour, right? But then the last half hour, shorts were clearly trapped. Everyone was shocked. I'm sure people were shorting this all the way up. And most of the guys that I coached, I spoke to, some of them made some money. A few of them lost a little bit of money. But no one got clobbered yesterday. And when you're getting directional moves like this, and obviously me, my mother, and everyone on Wall Street was looking for a continuation to the downside, right? And we were even thinking, right, in the morning, well, maybe we'll get a roll up to the upside and then a roll over. I certainly was thinking that was a possibility, and that didn't occur. That's when you know, hey, it's time for me to back off. Most of the easy money is made before 1 o'clock in the day, and that just simply did not happen. So this is Simon with Trade and Perform Coaching. Guys, my coaching clients, I will be doing all the reviews, the pre-market reviews, live now, and I will record those and post them later in the day for non-clients. And I hope everyone had a great day. We will do this all again on Monday. It should be a very interesting week. Have a great weekend all. I am very blessed to be able to do this work, and I also feel very blessed to be able to help other traders go from struggling traders or break-even traders to profitable traders. It's a great blessing. Talk to y'all later.